Hey, what's up guys? John here. The CEO of Bank of America said something that everyone in the world needs to hear because it's going to signal exactly what the economy is going to look like, what it's going to look like to buy a car, to refinance a car, to buy a home or a rental property. It's going to change everything about investing, and I don't believe it's just going to be Bank of America. I believe it's going to be all banks in America and probably all banks everywhere. This is going to be the new standard when it comes to lending. So everyone really needs to pay close attention. Please hit the like button. When you hit the like button, YouTube's going to share this content to educate more people about what's really going on in the economy. Now, first, mortgage rates, because this is all going to lay in and lean on exactly what the CEO said, and it's going to substantiate everything. So right now, 800 credit score. If you have a perfect credit, 7.29% on a 30-year fixed. The average credit score in America is a 698. So that would be a 7.884% for a 30-year fixed rate. If you have bad credit, 8.25% on a 30-year, right? Crazy, absolutely crazy considering 14 months ago was 3%. Now, what I believe is very likely to happen is the Fed very likely could increase rates 75 basis points at the next meeting and then 50 after that. We could start to see rates continue to rise. Wouldn't surprise me to see, even if you could get this loan, which I don't think anyone's even offering this 640 to 659 loan based on what Bank of America is saying. But even if you could, that could go to 9%, and even a perfect credit score could go somewhere around 8 or maybe even higher, which is absolutely crazy. Think about what that would mean. If you were buying a home, let's say a $500,000 home, the cost for you to buy that home and actually service the mortgage would be twice what it would have been, or more, would have been just 15 months ago, 13 months ago, meaning that there's just no way that we're going to be able to see those prices stay anywhere near where they're currently listed right now. And I've been in real estate since 2008, and back then lenders really tightened up on their lending restrictions, and that's what's happening again. It says whenever a recession happens, credit should get tighter. 2006, 2005, anyone could have gotten a loan. The ninja loans, no doc, no verification. They'll just they wouldn't even verify income. Like anyone could have gotten a loan, but that all came to an end. But look at this. Bank of America CEO on prospects of recession. Our data shows the American consumer is very healthy. They're saying that, the American consumer is very healthy and everything is fine, everything looks great, but yet on the other side of the coin, they're only lending to people that have incredible financial situations. Like they're not touching any of the borrowers. It says, despite the talk of inflation, recession, and other fears that could slow down spending, customers at Bank of America helped push transaction volumes 10% higher in September and the first half of October than earlier this year, according to the CEO of Bank of America, Brian Moynihan. And it's not just Bank of America. U.S. banks seem to be having a Goldilocks moment with credit card portfolios. Jennifer Serrane from Bloomberg suggesting a scenario in which the economy is not too hot, it's not too cold, it's just right. Now, the economy is not too hot, not too cold, it's just right. Inflation's costing the average American household $11,500 per year. Incomes are flat. Debt is higher. Household debt is higher today than it's ever been in human history. I don't understand how the economy is just right. Doesn't make any sense to me. Analysts might wonder whether the talk of inflation, recession, and other factors could result in a slower spending growth, Moynihan said, during a conference call on third quarter results that exceeded analyst expectations. We just don't see that at Bank of America. Bank of America reported third quarter earnings Monday with credit card spending increasing 13% to 1.25 million new card accounts. The average FICO score, 770. So that was who got the actual approvals. Out of 1.25 million credit cards that got approved, the average score was 770. That's absolutely crazy because a perfect credit score is an 850, and even Warren Buffett himself probably doesn't have an 850 credit score because it's very, very hard to get that score. A great credit score, if you're above 750, if you're in the 750 to 800 range, that's really, really solid. But for this to be an average of 770 says a lot. Price inflation accounts for some of the highest bank customer transaction volumes, Moynihan said, but the number of transactions also rose 6%. Consumer creditworthiness remains strong, according to a Bank of America chart, which shows the average FICO score for consumers and credit cards, as I mentioned, Q3 was 770. But the average FICO score in auto loans is 789. The average FICO score on new mortgages, 768. And the average FICO score on home equity lines of credit, 792. 792 for a HELOC, a home equity line of credit. That's absolutely crazy. The average mortgage, 768. So I know, people always say when the market crashes, I'm going to go out there, I'm going to buy, I'm going to invest, I'm going to get this great deal. It's going to be a huge discount. It's going to be amazing. I'm going to really thank myself and pat myself on the back for saving money for so long and having everything, set up to go buy when things hit the fan. But the reality is that it gets a hell of a lot harder to get a loan. That's the fact. It gets a hell of a lot harder to get a loan. But these lending standards that they're introducing, that they're saying is the new normal on who they're lending money to me signals that there's going to be more barriers than just sitting on money to go in there and buy up these distressed deals. I believe that we're going to likely see this continue across a lot of big banks all throughout the country, all throughout the world. They're going to start tightening up. It's going to start getting so hard to get a property or to even buy a vehicle. Now, if you have, let's say, bad credit, obviously you should fix it. But one thing you should do is if you have adjustable rate debt, if you have anything where the rates in which you would be responsible to pay would go up, this is the time to refinance and get fixed rate debt if you can, if you have that option at more favorable terms. Because if this continues, which it looks like it's going to, it might get very challenging to refinance out of bad situations. That's why right now, I own CashNow.Video, and we're helping a lot of people fix their credit right now. We're suggesting for certain people that the ideal situation, if they have high interest credit card debt or high interest personal debt, is to take out 0% interest lines of credit at certain banks, certain credit card companies, where you have a 6-month, 12-month, 15-month introductory APR, and get on an aggressive pay down schedule to pay off debts as quickly as you possibly can. Because what you want to do is you want to be debt free. You want to be debt free with an incredible credit score, and you want to be able to move and pivot with the times when things get tough. Because according to Bank of America, it looks like that's exactly what's going on now. It looks like they are tightening for the times. They go on to say, it's just absolutely crazy. Wild numbers that even if you buy them makes the economy seem fine before a holiday surge. Zero Hedge saying the same thing. This is crazy. This is absolutely crazy. He sent out this person sent out a post on the 17th, so just 2 days ago, breaking everything down. This to me signals that if you want to invest, this is what I would do. Obviously, you want to pay down high interest consumer debt. You want to speak to a mortgage lender now and let that mortgage lender know, hey, this is what I want to do. My goal is to buy a property around this price point. What does my down payment need to look like? What does my income need to look like? What does my credit score need to look like? If things are continuing to move in this direction, if I want to buy or make an investment in 6 months or 12 months, where would you think that I would need to get? And they'll at least kind of help you build out some type of framework. It's going to be completely free. You can just literally look them up on Yelp or online, search them by great reviews, and you could literally just check them out and get some free advice and free input. But I would definitely underwrite that with caution, because I think that it's going to probably be much harder than what they're anticipating. But you think about it, if it's much harder than what they're anticipating, that means that there's very likely going to be many more property sellers than available qualified buyers to go out there. So this could be a great thing for you if you're intending to invest in real estate. I just think these numbers are absolutely crazy. A 768 average for a new mortgage and nearly 800, 792 for a home equity line of credit. Auto loans, 789 average. What do you think about it? Drop it below. Let's have a conversation about this. Do you believe that this is going to continue? Do you believe that this trend is going to really push a lot of people into a situation in which they're not going to have access to capital and credit, affordable capital and credit? Now, what I think is going to happen, the payday loan industry, the installment loan industry, the car title loan industry, all these industries are going to flourish in an environment like this, because what's going to happen? People won't have anywhere to turn, and so they'll go and borrow $1,500 and pay back $6,000 because they don't have any other options, right? They'll pay $150 every 2 weeks for 48 months or whatever it is. That's what's ultimately going to happen. So right now is the time. You either do a situation in which you can get a better term on your adjustable rate debt, you refinance, you fix your credit. I believe we have 6 months. 6 months to really stack cash, and get into a really good situation so that way you can invest and buy distressed deals. What do you think? Drop below, hit the like button, subscribe here, and subscribe to my second channel. If you need help fixing your credit, we would love to help you at CashNow.Video. Feel free to call us at 561-430-5900. That's 561-430-5900, or even DM us on Instagram at CashNow.Video, and subscribe on LinkedIn, Twitter, Instagram, and TikTok in the banner, and I'll catch you guys in the next video.